Hey everybody, you're watching Mark's Money Secrets, and I'm Mark, and today we're going to be talking about that very sneaky thing that the IRS just did in March of 2023 in changing the laws around how irrevocable trusts are handled. Let's roll. An irrevocable trust is a wonderful structure that many people use to protect assets against both estate tax, gifts tax, and even income tax on appreciating items that they put into this trust. A trust is created at the state level, much like a company is, but under a much lower level of law, not the Uniform Commercial Code or corporate law, under trust regulations. Trust originated from common law from 10,000 years ago in the idea that someone can put their stuff away from their person so that they control it all but don't own it all, so that nothing can be taken from them, for the purpose of giving those assets to children or other people once the grantor passes. Now in modern times, we have over 80 kinds of trusts that we can use, branched out into a few kinds of categories, but the main category is revocable and irrevocable trusts. An irrevocable trust means that when we put stuff into the trust as a grantor, it's no longer ours. We can't change it. We can't change the trust. That is it. That stuff is then assigned to somebody who is in an arm's length relationship with the trust called the trustee. They manage the stuff in there, and then at some point that the grantor said in the trust, the beneficiaries get the stuff that the grantor ultimately put into the trust. The nice thing about a trust is if you don't put things in there that must be registered with the government in any way, like property or a car or a gun or something like this, they are completely private, need to be filed nowhere, and they're in your little safe to be revealed upon your passing. Much, much more powerful than a will. Probate is never involved because it's not in your name. However, with the new rules of the Internal Revenue Code, that trust has to be created in a squeaky clean fashion, and there is no fudging on how irrevocable trusts are written. In fact, every piece of property that's in that trust, like a line item on an insurance schedule, must be present in that trust. The trustee cannot be fudging around with the items themselves and using them for their benefit. Like, for example, if your wife put your house into the trust and you're the trustee, but you're living in the trust, that is now a no-no, because you're benefiting from beneficiary assets, the house, while you should be the trustee and hands off, or at arm's length at the very least, but instead you're living in there. That kind of behavior is going to be blown up based on this new ruling in March of 2023. If you have an irrevocable trust or something in that family, please go back and review your documents so that under scrutiny you don't lose it all upon your passing or upon scrutiny by the IRS. Like I always say, it's okay to have a pound of heroin in your trunk. No one's going to care until they pull you over for speeding, and then you're going away for 20 years. It's the same with trust law, and now even more so with this new ruling. Hopefully this has been valuable to you. If so, please like this video and subscribe here so that we can keep making more of this content for you here on Mark's Money Secrets.